From Bloomberg World Headquarters in New York to our TV and radio audiences worldwide, I'm David Weston. Welcome to Balance of Power, where the world of politics meets the world of business. I want to get a check on the markets right now. Joining us is Abigail Doolittle. And boy, the equity markets are all agreed. They don't like it very much what they're seeing.
That's certainly the case. And it started in Europe, David, with selling of those European indexes. In fact, the DAX now truly ripping below its 200-day moving average. Probably not a good sign here for the S&P 500 in a week or two. All of this on fears around the virus and its resurgence and what it could mean in terms of future restrictions and what that could do to the economy. We see the S&P 500 down about 2.5%. We have the tech and the energy sectors down sharply. Oil tumbling too, down more than 5%. So risk assets right across the board being sold. It's not panic though, David. It's very orderly. In a way, it almost reminds me a little bit of late February after the first couple of days of panic selling in February and ahead of the worst selling in March. Let's see whether or not that happens. But there is some technical, there are technical concerns here in the U.S., the S&P 500 below its 100-day moving average, again suggesting it could follow that German DAX at some point below the 200-day moving average on fears around the virus and uncertainty here in the U.S. However, there is a bright spot, and you pointed it out to me earlier, and that is the fact that we have bonds basically at this point, they're actually slightly lower. Before they had been slightly higher, but just let's call it flat. Where we do have a haven bid, though, the dollar at the highs, the dollar had been up about 0.8%, heading to its best day since June. And on the week, David, it is worth pointing out that bonds are actually higher. In fact, the best week since August. So overall, right now, this week is certainly shaping up risk off.
And a couple of questions, Abigail, just to follow up. Number one, volume. How big is the volume? But the second one is, what's going on with volatility?
Well, I'm so glad that you're asking about volume, David, because I don't always check it, but I was just looking at the average volume at time function, AVAT, on the Bloomberg terminal, and we are 45% above the average volume. So these sellers, they mean business. As for volatility, the VIX is up. The NASDAQ 100 VIX spiking back above 40 and close to 45. In fact, heading to its biggest spike higher since July. So again, this selling pressure is serious, and because we have signs of weakness there in Europe, along with the S&P 500 being below its 100-day moving average, a fancy way of telling you that the near and medium-term buyers are folding out. They folded their hands. They're out. They're waiting to see whether or not the long-term buyers will pick up. There's reason to think that this selling pressure could, in fact, continue.
So that's the question. What will you be looking at to indicate whether it does continue or not, Abigail?
Well, I will, of course, be looking at those technicals, and the German DAX, as I just mentioned, literally sliced in a more violent way than happened in February below its 200-day moving average. That tells you the long-term buyers there, they are getting out. They don't want to be in stocks right now. The S&P 500 trades in a similar way, so I think that you could probably see the S&P 500 below its 200-day moving average as fears rise around what the virus could mean. Something that really stands out in the month, David, is the utility sector. In the month of October right now, we have the S&P 500 down. Only two sectors are higher, one of them fractionally, but the utilities up by about 9%, heading to its best month since May of 2003. And the reason that stands out is it is a defensive sector, and investors are going into this defensive sector even as yields are down. Typically, you would have these utilities. Actually, that makes sense that you do have the utilities, higher right now with yields about flat to down. But the fact that you have this defensive sector outperforming in such a massive way in this risk-off month, that suggests that November could really perhaps be pretty difficult, David.
So, Abigail, as you pointed out, this is following what happened in Europe. So it's not just a U.S. phenomenon. It's not about the election right here. But as a practical matter, can traders settle down until after we're past the election, we know what the results are? Because that's a source of volatility in and of itself.
That is certainly a source of volatility, and a lot of traders, experts would say, be ready for anything. I think because the virus is probably at this point the bigger systemic issue, because if we do see more drastic lockdowns, that could really damper the economy. I think that's why you're seeing that huge selling pressure over in Europe. That will really supersede, if you can believe it, the election. A lot of traders and strategists talk about the election as more of noise, the uncertainty around it, but that would be the near-term whipsaw. Whereas if the virus, unfortunately, if it does really worsen, as it seems to be the case, that could be a longer-term drag on the economy. That's what we're seeing in the technicals of the markets, that a lot of investors are really wanting to take chips off the table.
Okay, thank you so much to Abigail Doolittle for that report on the markets. I want to turn to General Electric now. General Electric surprised Wall Street today, reporting a profit when an analyst expected a loss and exceeding expectations on revenue and on cash flow as well. Welcome now, GE Chairman and CEO Larry Culp. So first of all, I think I should say congratulations, Larry. But secondly, I will say you stepped into GE when it was thought to be something of a turnaround of a really respected, vaunted company that has fallen on hard times. People thought you might be able to do that, but if there's a downturn, that's really going to set your plans awry. Now you're apparently getting a turnaround in the middle of an economic downturn, in the middle of a pandemic. What's next? Can you keep this going?
David, good to be with you. It's been an interesting 2 years on this turnaround journey. But you'll recall when I think we were together in March, we were in a very different place, right? We knew that our aviation and healthcare businesses were outstanding franchises. And the challenge really in 2020 was take that next step in our deleveraging, which we did in March with the $20 billion proceeds from our biopharma sale, and really then continue to build momentum with respect to the turnarounds in both our power and our renewables businesses. I think today's results, headlined by a $500 million positive free cash flow number, gives real support to the argument that that turnaround is underway. It's still early, David, make no mistake. But I think we're very encouraged by what we saw in our power business, particularly in gas power. And renewables was profitable. This is the first time in 2 years we've had all four of our reporting segments, in fact, profitable. Healthcare, though, was the standout business for us in the third quarter. Aviation is still pressured on the back of departures being down now 40%, far better than what we saw in the spring, but still down. I think we're building momentum. Again, it's early, and there's a lot of work to do in all of our businesses. But I think what you see today is evidence that we're moving forward, COVID or not.
And Larry, like other excellent CEOs, you focused on controlling your costs, getting your arms around costs, also execution, really executing well. There's a limit to how far you can take that, though. At some point, you have to grow. And so where do you see the growth coming up? Going forward, where do you see growth?
David, you're exactly right. What we want to do in the short term here is make sure we are driving both cost and cash actions so we've got more control of our destiny. But longer term, I just think GE is set up really to lead and to grow. If you think about where we are in both power and renewables, well positioned to lead in the energy transition. Precision health, when we talk about personalized medicine, more efficient care delivery, we sit in the middle of what I think will come here, and an important opportunity for us. And certainly, as we think about a safe return to flight post-COVID, our aviation business is going to need to play an important role there. So we see growth opportunities, profitable growth we can convert into cash across the entire GE portfolio today.
So Larry, talk about power. You've mentioned a couple times now. Specifically, you've got different aspects of power at General Electric. Give us a sense of where you are in that. And let me specifically ask, for example, we've got an election coming up, you've noticed. I'm not going to ask you to take a position on who's going to win or lose, but there seems to be quite a diversity in the points of view when it comes to renewables. Are you putting a sensitivity analysis in, an up and a down, on what might happen if, in fact, we did have Democrats in charge rather than Republicans?
Well, David, we run both our renewables and our power businesses as global businesses. And there's no question that as we look around the world, we see transitions in many places from coal and nuclear to the power gen sources of the future. We don't think that's strictly wind and solar. We think gas has an important role to play. So when you look at energy independence, when you look at the desire for high reliability, in addition to addressing the climate change challenge, we think we're well positioned. Our onshore wind business is strong, near record shipments here in the third quarter. We have had very good progress, a nice new order for our emerging offshore wind business, and our core gas power business, which is really the heart of our power segment, continues to prove that our leading 7HA technologies have a role to play today. And I think in time, with the introduction of hydrogen, even more so going forward.
Give us a sense of what's going on in aviation. You referred to it. And of course, aviation took an enormous hit from the pandemic as a practical matter globally, as you would say. What are you seeing right now in aviation? And maybe as important, do you think it's a short, or even if a short is a year or two phenomenon, or are there fundamental structural, even permanent changes coming up?
David, we do think that we are on a path as an industry to recover to the 2019 levels. That seems to be the benchmark that many people use. We haven't put the tail on the donkey, if you will, and said we're going to be back there at a time certain. But we do think we get back there. Clearly, the industry will look different when that time comes. As we look at departures, and we look daily, what we've seen is we've seen departures down about 40% since really Labor Day, and in essence flatlining. So we've seen a little bit of puts and takes here and there. China back to near pre-COVID levels. Europe has turned down here over the last couple of weeks. But I think as we move forward, again, we're trying to control our destiny with the cost and cash actions that we've talked about, while continuing to make sure that we're in a position to work with our customers as they mount the recovery curve here in the quarters and years ahead.
Larry, all of us are so conscious of healthcare, given what's going on with the pandemic globally, not just in the United States. Give us a sense of your view of how your business is doing in healthcare these days.
David, we probably didn't have a better performer in the third quarter than our healthcare business. They've certainly have been on the front lines really since Wuhan with respect to being part of the solution. I think the spike in ventilator demand has been well documented. We've also had other products like patient monitors, both in the second and third quarter, that enjoyed tremendous demand. We, in fact, took our in-house ventilator production up fivefold, if you can believe that, since the beginning of the year. We see that tapering, which really will perhaps move a bit here, given the potential spiking in COVID that's playing out. But I think the core of our healthcare business, the imaging franchises that we have there, are again important positions in the world of precision health, ones that we think we can grow and grow profitably, which we will intend to do.
From the beginning, when you first took over, Larry, you were focused on leverage and really getting the leveraging down, retiring debt. As I understand, you retired some more in the third quarter. Where are you in that process? How close are you to the end line for you?
Well, we thought back in March, David, when that $20 billion check came in for our biopharma business, that we were going to be well on our way. And if we simply executed the turnarounds in power and in renewables this year, with aviation and healthcare so well positioned, we would be approaching that 2.5 times target that we've set for our industrial business. It's going to take a little while longer now, right? We're going to need to grow our cash and our EBITDA to a point where we're in a less leveraged position. Fortunately, we think we've got the time to do that. And again, today's results, I think, underscore that we're making progress in that regard, with, again, more to come.
You still have some things to clean up, and they're referred to, actually, with this quarter, and particularly with the SEC, some investigations going on, particularly on how you accounted for long-term care. Where do you stand with that? Because some people are actually pleasantly surprised. You reserved, I think, $100 million, and they thought that was a low number, given the size of some of the problems, potentially. So does that tell us something about what your assessment is of those problems?
That's exactly right, David. We have disclosed before, as you well know, that there's an active SEC investigation relative to some legacy items around our long-term care insurance accounting, our service agreement accounting, and goodwill charge and power. The charge that we took, the $100 million here in the third quarter, was really our best read, given the circumstances, as to the appropriate number for the investigation in its entirety.
So to come back to my first question, Larry, what comes next for you in your turnaround? I mean, is it continuing with the plan you have, or are you looking at other possibilities, whether they're structural or otherwise, for the GE of the future, going out 2, 3, 4 years?
David, it's still very early in what we're doing here to unlock and realize the full potential of GE. So we want to be in a position where power and renewables are far more profitable. We think that our gas power business, for example, can be cash flow positive next year. We have a lot more to do to make our core wind business a higher return business, while we fix some of the other businesses in that segment. Healthcare, we'd like to continue the path that you see us on here in the third quarter. Aviation will take a little bit longer. Some of that's a bit outside of our control, given the COVID effects. But nonetheless, we're not going to wait for the market to deliver better performance. We're hard at work, working to do that here in the fourth quarter and getting ready for 2021.
GE had a big set of challenges when you took over, as I've said, for any CEO. But how does a CEO deal with the COVID pandemic at the same time? Because that's something none of us knows. I mean, none of us are trained as epidemiologists, for goodness sakes. We can't know the science. This disease seems to go a different direction all the time. We're watching some partial shutdowns over in Europe. How do you take that into account with your planning, Larry? How do you get GE ready for a world where you don't know how open we will be 6 months, 12 months, even later?
Well, the good news, David, is that when COVID hit, we were already in this transformation of the company, right? Changing the way that we work day in, day out throughout the company. So it has certainly been an additional challenge. There's no doubt about it. I think what we tried to do was really just step through a simple framework where we embrace the reality. We embrace the uncertainty that existed back in the spring. We wanted to make sure that we were framing for everyone what the next victory would look like. Admittedly, in places far more modest, but we wanted to make sure people could see progress and maintain hope. And then we've just been hard at work executing that plan. It's really that fundamental. Now it's a daily battle in many respects. And while we've had a good quarter here, I wouldn't say we've won every day. So the work continues. But I think it's work this team has proven it can do. It's a gritty, it's a resilient team, a team I'm proud to be a member of. And we've got many good days ahead of us at GE. I really believe that.
Larry, it is always a treat to talk with you, whether it's good news or bad news, but I'm happy for you that it was good news today. Well done. Okay, that is GE Chairman and CEO. He is Larry Culp. Coming up, the CEOs of Facebook, Twitter, and Google all testifying on Section 230 today before the Senate Commerce Committee. We'll hear from Michael Wolff, founder and managing director of Activate. That's coming up next on Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and radio. I'm David Weston. The CEOs of Facebook, Twitter, and Google are spending their day testifying to the Senate Commerce Committee on the question whether one provision of federal law, that's one that protects them from being sued for their decisions to include or exclude social media posts from their services, whether that provision should be changed. We welcome now an authority on the media, its past, its present, and its future. Michael Wolff is founder and managing director of Activate. He earlier served as co-COO of MTV and as a board member of Yahoo. So, Michael, it's always good to talk to you, and particularly when it comes to the media. Give us your take on what's going on in these hearings so far. It's a big day. That's right. Give us your take. You've been following them closely. What's going on with these hearings? Are they really going to change Section 230, this provision that immunizes them from a lawsuit?
Well, I mean, this is all about, ultimately, Section 230 of the Decency Act is really all about content moderation. And so both sides of the aisle have been focused on this. I mean, it's an issue for both sides, but it's an issue from a different perspective for each. On the side of Democrats, it's more about avoiding misinformation, voter suppression that's spread through these platforms. However, on the other side, there is this concern that this is all about bullying the big social networks right before the election because they're labeling the president's posts as misleading or false. And so, and each of the companies is taking a different stance on this. So Facebook is saying we welcome government regulation. Google is saying we'll figure it out, and Twitter is saying what we really want to do is give users some control about how information is spread across our network.
So, Michael, this provision of law was enacted at a time that either social media didn't exist or it was very embryonic. It didn't look like the world we see right now at all. And it was done, as I understand, in part to encourage them, to protect them so they could grow up without having to review each and every post the way people do for articles in the New York Times, the Washington Post. Do they still need it? Or put it around the other way. If they changed this or took it away, would it really fundamentally damage their businesses?
I think it's not going to damage their businesses. I do think it will damage the unintended consequence of this is really damaging businesses that are up and coming social networks like TikTok and others. I think if these regulations had been in place, they really would have hampered the growth of other social networks. Instagram, which now belongs to Facebook, probably wouldn't have grown as quickly. TikTok, certainly there's a lot of content on TikTok that might be viewed as politically undesirable, but not necessarily somehow that's protected in the same way. Each of them is going to find a way in which they could work around this. Typically, when there's regulations for big tech, it ends up hurting the upstarts who typically have been the real challengers to these big companies versus somebody else big. And so I'm personally concerned about this. I think that these companies have already done a great deal to moderate content. It's nothing new. I mean, some of the examples of this, it's not just about political information. Some of the examples of this is 80% of people go to Google to search for medical information. Google only provides information. The first results are from established and reputable sources like the Mayo Clinic because they want to avoid speculative cures. This is the same thing here. They want to avoid things that are misinformation. The challenge here is they're going to try to strike this right balance. I don't think it's going to go away, but I think they're trying to get it out of the political and get it into more of the practical of what do they need to serve their users best.
Michael, it strikes me watching Washington right now with respect to technology, there are two very different tracks of regulation. One is on the antitrust side. We saw that out of the House with the Cicilline subcommittee, basically, which is antitrust. It's an economic form of regulation. They're too big and powerful for the economy. The other is content, substantive content, as you say, really moderating who wins and who loses. Compare those two approaches. Is one more efficacious or is another more dangerous for the business and for society more largely?
I think that the economic side of this is these companies have become so big that we call them walled gardens. I mean, they have so much of their ecosystem is around them that they end up crowding out anybody else from digital advertising. I mean, today, almost 3/4 of all digital advertising goes through these top companies. So there are issues there that can be anti-competitive. And there are a number of things that can be done from a regulation perspective to at least open up the market. In this case, Section 230, this is about their content moderation. And let's recognize that there's a lot of content that's generated by users that these platforms, part of their value is they spread it. They make it addictive, that you as a user start finding things that you're interested in that you find there are others. It's really algorithmically spread. And so the issue is they have an interest in making sure that there isn't that kind of false and hurtful information. And at the same time, they want to allow their users to contribute and want to get people to continue to use their platform. So I think that neither, if they're done right, can be harmful. I think that it just comes down to who's deciding what's good, what's false, and I don't think that can be left to legislators.
So going back for a moment to what I would call the economic regulation, and particularly the online advertising component,
Right.
Activate has a new report. You bring one out every fall. I read religiously that talks about adding just short of $350 billion in new business over the next 4 years, and fully half of it is advertising. So do we need some way to sort of constrain the big guys? Because you say 75% of the new advertising dollars are going to a couple of providers. Do we need to constrain them so other people can catch up?
We need to there are ways in which to constrain them. We just have to make sure that they're not going to block other people from getting it. So if you look at these companies and you add Amazon on, they have a huge advantage in getting advertising dollars, not just on their own platforms, but they end up being networks for other people. And so yes, if you want to create a level playing field, this is a great role for antitrust. This is a great role. And a lot of this, if there is the Justice Department, there are things where the Justice Department will have to intervene. I mean, some of these challenges around app stores, who gets to go in, what are the content, those are things that over time are going to need to be either negotiated or legislated.
You said the crucial words, over time. As a practical matter, things like Justice Department actions take years.
Right.
So don't hold your breath.
Right. I think that what happens is in these industries, which move very quickly, there's that threat or that's in the background. And I think it'll get these people to come to the right conclusions. These industries, they're not great at being regulated.
No,
They're better
no.
off figuring out their own solutions.
Exactly. Michael, such a treat to have you with us. It's Michael Wolf of Activate. And a program note now, you can tune into our coverage on election night starting at 7 p.m. Eastern Time. We'll bring you all of the drama of Tuesday night coming up 6 days from now. This is Balance of Power on Bloomberg Television and on radio.
This is Balance of Power. I'm Guy Johnson. European stocks wrapping up. There's not much up in it, though, I have to say. Ugly session. A lot of repositioning taking place today. De-risking around the COVID story really front and center for European equity markets. And Europe has definitely dragged U.S. equity markets down with it today. So let's talk about the session. We're finishing near session lows. Gap lower first thing this morning. The Stoxx 600 down by around 3%. But critically, what we've started to see was a break to the bottom end of the recent range and then through it. This is the last 6 months for Europe. This is basically year to date, actually. It's a bit longer than that. And you can see Europe in an incredibly tight range over the last few months, over the summer, basically, as we started to reopen economies. We've now broken towards the bottom end of that range and are broken down below it in today's session. That's critical. Let's talk about the individual markets here in Europe. The DAX breaking below its 200-day moving average. That is where we have seen most of the negative price action. But other key markets around Europe not far behind, as you can see. So the DAX down by around 4.5% as we come into the close. The CAC 40 down around 3.5%. The FTSE 100 in London down by around 2.75%. In terms of the sector breakdown, it's been the autos that have really done the damage. Volkswagen is going to be reporting numbers tomorrow. That's why Germany has really taken it so hard today. We've also seen a significant spike in volatility. We're seeing this on both sides of the Atlantic. The VIX trading around 30, but we've seen the VDAX, the VSTOXX index, which effectively is the VIX equivalent over here in Europe, spiking sharply higher. And as you can see, on the month, we're now up by around 42%. Bunch of risks being priced into that. Implies around a daily swing of around kind of 1.8% on a session. That's effectively the implied volatility for European equities right now. In terms of what we're seeing in other asset classes, because these have been crucial as well, the pound actually bouncing off its earlier lows as we had some positive Brexit news, but nevertheless, this has been a day for the dollar. People are definitely running back into the to the dollar, and you can see that with euro dollar today down by around 0.3%. Remember, it is the ECB tomorrow. We are going to hear from Christine Lagarde. A great deal of pressure on her. We have seen also a bid back into the bond market today with negative 62 on a German 10-year. Now, earlier on in the day, we actually see BTPs and bonos over in Spain, the Spanish equivalent 10-year, actually on offer. That has turned around, and that's interesting in the light of what we could potentially get from the ECB tomorrow. Maybe the market making an assumption that Christine Lagarde will be a little more dovish as a result of the price action that we're seeing here in Europe. And boy, it has been ugly. David.
I should say thank you so much, Guy. And by the way, here in the United States, we're not far behind you over in Europe with the NASDAQ off just under 3%. And by the way, Dow Jones and S&P are not that far behind in their losses. But now for Bloomberg First Word News, we go to Mark Crumpton.
David, thank you very much. The coronavirus outbreak is seeing a spike in the New York area. COVID-19 cases in the state have topped 500,000. And in New Jersey, hospitalizations have exceeded 1,000 for the first time since July. The two states, the early focus of the U.S. outbreak, are seeing a resurgence in recent weeks. Germany will impose the toughest restrictions since a national lockdown in the spring. Chancellor Angela Merkel has agreed to a one-month partial shutdown. Her proposal called for closing bars, restaurants, and leisure facilities to stem surging coronavirus infections. Chancellor Merkel also urged citizens to keep social contacts to an absolute minimum and avoid all non-essential travel. Some progress is being reported in Brexit talks. Bloomberg has learned that's raised hopes that a deal could be reached by November. Tomorrow, the talks move to Brussels. If negotiators there can narrow their remaining differences by November 3rd, the ball will then pass to UK Prime Minister Boris Johnson and European Commission President Ursula von der Leyen for them to broker a final compromise. Hurricane Zeta is strengthening as it spins across the Gulf of Mexico. The storm is threatening to slam into New Orleans tonight as a Category 2 storm. Forecasters say Zeta could have winds of 100 miles per hour. It's expected to cause as much as $3 billion worth of damage. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Thanks so much, Mark. Coming back to the election, the Supreme Court is already getting involved in next week's election, declining to intervene in lower court decisions in Pennsylvania, extending the time for counting absentee ballots, and in Wisconsin, refusing to extend the time. For an overview of where things stand and what this could all mean for exercising our right to vote, we welcome now Kristen Clark. She is president of the Lawyers Committee for Civil Rights Under the Law. So welcome, Kristen. It's great to have you with us here. We have these two decisions, and they're just orders. We don't have opinions out of the Supreme Court. Are they conflicting or not? Because in Pennsylvania, they can have 3 extra days, and in Wisconsin, you can't. Kristen, can you hear me? Kristen Clark. We're going to work on getting Kristen Clark back. We have a little technical glitch, just like Mark Zuckerberg did with the Senate today. We're going to now go to break. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. We are back now with Kristen Clark. She's president of the Lawyers Committee for Civil Rights Under the Law. Kristen, thank you for your patience there. We had some technical difficulties. What I was saying before we were so rudely interrupted was we have a couple of decisions from the Supreme Court, just orders now without opinions, basically that seem to be contradictory, saying in Pennsylvania you can have 3 more days, in Wisconsin you can't. But do they really contradict one another?
Well, it's interesting, and we'll have to see what a Justice Amy Coney Barrett means for the equation. And I will say in no uncertain terms that I think that Justice Barrett should recuse herself from any cases concerning the ongoing 2020 election season. But we saw in one instance Justice Roberts inclined to be deferential to a judgment issued by a state court in Pennsylvania, a state Supreme Court decision interpreting state law. And that resulted in a 4-4 outcome of the court, leaving in place a decision that means that absentee ballots that are postmarked by Election Day will count if received up to a certain number of days after Election Day. But in Wisconsin, we've seen something different. We've seen the Supreme Court interject there and change rules that may lead to certain absentee ballots being rejected if they're not received by Election Day. The underlying case there did not arise in state court. It was federal court. But here's the issue. There's something called the Purcell Doctrine, which is a guiding doctrine for courts that basically says do not make 11th hour changes that will cause chaos for election officials and chaos for voters. So it's hard not to look at the Supreme Court violating that cardinal doctrine when they make judgments or issue decisions that are literally turning the system on its head. We're in the final stretch, and voters deserve clarity as they work to make their voice heard.
Yeah, Kristen, I think everyone would agree with that, but I'm a little confused. Maybe I don't understand the lower cases as well. In Wisconsin, as I understand it, you had a district court changing the rule from what it said, saying we're going to extend the time. The Court of Appeals changing that and saying, no, we're not going to change it. And the Supreme Court didn't get involved. The Supreme Court wasn't changing the rules in Wisconsin, was it? It was basically letting the state rule apply that you don't count until the day of.
That's right. And as I said, Justice Roberts is one of the more conservative justices who's inclined to be deferential to state court decisions. But that does not appear to be the case with Justice Kavanaugh and Justice Gorsuch, who this week signaled in concurrences that they issued that they would be inclined to interject, that they feel that elected state officials should be the ones determining rules concerning ballot access. But the thing is, in our democracy, we have 3 branches of government: a legislature that puts in place laws, but then courts that are tasked with making sure that we are preserving rights. And here, the right to vote, the right to access the ballot, the fundamental right to vote are all at stake in states where people are struggling to have their voices heard amid the pandemic.
Yes, clearly, but the personal doctrine you refer to basically would say don't change the rules too close to the election. So, would you be in favor of just saying let them lie where they are right now, whether it's good or it's bad, whether you have more than enough time to count or you have not enough time to count? Would you be in favor of just saying let's stick with those rules?
In most instances, yes, unless we're talking about an extreme set of circumstances that's resulting in mass disenfranchisement of voters, and we really need the courts to come in and provide relief because state lawmakers, state election officials, or others are failing to address the system of mass disenfranchisement. We don't want to turn a blind eye to that. But most certainly the court should not be putting their thumb on the scale at the 11th hour in a way that will lock voters out or literally lead to the disqualification of absentee ballots cast by eligible voters.
Kristen, let me back up because I went right into the Supreme Court decisions because you have a broader perspective here. What is your single biggest concern about people's exercise of their constitutional right to vote come next Tuesday?
The right to vote is the most central right to vote in our democracy, and it should not become a sacrificial lamb during the pandemic. There's states that have been struggling across the country to figure out how we can ensure that voters need not sacrifice their health or their safety to have their voice heard. And in this last stretch, officials should be doing all that they can to alleviate the long lines, deal with some of the mischief that we're seeing in places where you have handfuls, a handful of people trying to intimidate voters at the polls. And most certainly, we shouldn't be changing absentee voting rules in ways that will literally lead to ballots that have already been cast, that are already in the pipeline, that have already been handed off to the U.S. Postal Service. We shouldn't be putting in place new rules now that will lead to the rejection of ballots cast by eligible voters. There is a pandemic, and that is one overarching factor that makes this moment a unique moment in American democracy. We run an election protection program. Right. It is nonpartisan. Right. The 866 Our Vote hotline is a place that people can turn to for help and clarity with some of these last minute changes that voters are up against.
Yeah, well, clarity is something we can all get behind. No question about that. Really appreciate your being with us, and thank you for your patience. It was worth the effort to make sure we got to you. That's Kristen Clark of the Lawyers Committee for Civil Rights Under Law. This week, we're looking at Wisconsin as part of our Swing State series leading up to the election. And today, we welcome Republican Representative from Wisconsin, Glenn Grothman. So, Congressman, thank you so much for being with us. Give us a sense. We just have a new poll out from the Washington Post and the ABC News, basically saying that the former Vice President Biden has a 17-point lead over President Trump. Is that consistent with what you're seeing in the state of Wisconsin and in your home district?
No, I would be very surprised if that's accurate. There's a great deal of enthusiasm for President Trump. He was in Wisconsin yesterday. I happened to attend a rally with his son, Don Jr., in the Green Bay area, a tremendous amount of enthusiasm. We do have a little problem that there's a lot of more coronavirus in Wisconsin right now, but still of the 25 largest states, we're 24th, or we're the second best as far as fatalities per million population. And like I said, anecdotally, when I get around, there's a tremendous amount of enthusiasm for Mr. Trump. I think we're beginning to get more different issues out there, talking more about the huge reduction in people coming here illegally and talking about Joe Biden's promise to give free medical care to all illegals, I think is concerning to people. I think law enforcement, we had a press conference here yesterday with 4 local sheriffs, all afraid of the Biden agenda, getting rid of qualified immunity, hamstringing local police, I think is something that's resonating with the voters. I think they appreciate President Trump. We've had now 7 months in a row without a combat fatality in Afghanistan. Right. So whatever the issues are, I think the public is, at least in Wisconsin, is approving of what President Trump has done.
It's interesting listening to you, Congressman, because you say there's a lot of enthusiasm for President Trump, and you know your district much better than anyone else does, no question about it. But when I ask about it, you said, and they're particularly enthusiastic about things like issues like immigration, law and order, foreign affairs. Do I infer from that maybe they're not as enthusiastic about the way President Trump has handled COVID-19?
Well, I'm not sure what else he could do or what Joe Biden would say he'd do differently. I mean, obviously, we're spending a huge amount of money looking for a cure, a huge amount of money looking for a vaccine. We opened recently in my district a testing station. Will be, I believe, testing now till the end of the year. So we are doing all really the president is capable of doing. Obviously, Joe Biden is running commercials implying he'd do more. But like I said, short of looking for a cure, doing more testing, doing more equipment, I don't know what more he could do. And I mean, in the past, it was President Trump who shut off travel from China. Joe Biden was the one who implied it was a racist thing. So, but it is a concern. Let's face it, it is a concern because Joe Biden is running ads, saying I would do more, and we'll have to see how that plays out. And right now, we are in a situation in which the coronavirus is peaking kind of at the wrong time for President Trump.
Yeah, just to pick up one thing, it is absolutely true, as I understand it, Vice President Biden did accuse President Trump of being xenophobic, although not specifically in connection with the decision about excluding people coming in from China. But I want to talk about people in your state, not just the issues. What we hear, those of us who are not from Wisconsin, is that it's basically between, on the one hand, more rural dwellers, voters who tend to go very much for President Trump, as opposed to urban and suburban who tend to be more for Democrats. Is that consistent with what you know of your state, or is that too simplistic?
No question. Joe Biden's base is in Milwaukee and Madison and the suburbs right up against Milwaukee and Madison. Perhaps not surprising. There's certainly many government workers voting for President Trump, but obviously you have a lot more government workers in Madison with the big university system there, as well as the state capital. And Milwaukee, urban center, and like urban centers around the country, more strongly Democrat. And I think a lot of times wealthy people are more likely to vote Democrat.
We have a record number, by all accounts, of absentee ballots now being cast in Wisconsin, as well as elsewhere in the country. Do you have any sense of how much that's going to delay the results in Wisconsin, not just for President Trump, but for you? You're up for re-election as well.
I don't think it's going to delay it a lot because we've had absentee ballots in the spring elections, and in some cases, I think the absentee ballots will be counted before Election Day, I believe. Some clerks are asking to be able to do that. So insofar as that's done, I think it will mean things are done even quicker. Obviously, for the staff in the polling places, there's going to be less of an in-person line the more people vote in advance.
Okay, Congressman, really appreciate your time. It was very informative. That's Congressman Glenn Grothman. He's a Republican of Wisconsin. And be sure to check out our special on the swing states, airing this Friday at 7 p.m. Eastern Time. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. The Senate hearings on possible changes to Section 230 of the Communications Decency Act of 1996 has been going on all day long. And for a summary of what we've seen and heard so far, welcome now the anchor of Bloomberg Tech, Emily Chang. So, Emily, thank you so much for being with us. You know tech so well. You've been following this carefully. As you watch these hearings today, what's your lead that you take away from it?
So, David, so far, Jack Dorsey, the CEO of Twitter, has been getting the most aggressive line of questioning. The senators, specifically the Republican senators, have been very focused on any actions taken on the president's Twitter account, as well as actions that both Twitter and Facebook took on the New York Post story about Hunter Biden. Zuckerberg getting fewer questions than Dorsey, Pichai, very few questions at all, very little focus on YouTube, which arguably is a major platform. And, you know, the big question is this really about Section 230, or is this a show 6 days before the election to allow Republicans a chance to highlight conservative bias. There was a very fiery exchange between Senator Ted Cruz and Dorsey, and Cruz last night actually tweeted a much retweeted graphic predicting a showdown between the two of them about free speech. Dorsey maintained his calm, but didn't necessarily advance the most convincing argument that they have handled some of these situations well. So, we are now 3 hours into this and only through one round of questioning. So it could go on for several more hours, and I expect more politics and more fireworks.
Emily, you live out there. You know these people well. You talk to them all the time. How worried are they about changing Section 230? It was enacted long before we had the huge social media companies we do today. If they changed 230, would it really hurt their business?
Absolutely. Section 230 was made into law when Mark Zuckerberg was a teenager, and it is a wonky part of the Communication Decency Act that shields these online platforms from liability for content their users post. It seems that all the CEOs broadly agree that increased transparency and some sort of modification of Section 230 should happen, but that the law itself allows them to moderate and police the most violent and vile content. And they say if they didn't have the ability to do that, then these platforms would be even unhealthier places. The big question is how that modification happens. It has enabled these companies to grow and not have to fight legal battles over everything their users post. But it is also, as you say, very outdated and probably needs a second look.
So, Emily, let's broaden this out just a little bit. We've got an election coming up, and there's a question of what the election might do to tech. I know you're doing a series of programs on that subject. What are you finding?
All of these platforms are under fire for their role in the last election and what they did and did not do. You'll remember back in 2016 when Mark Zuckerberg said it was crazy to think that Facebook could have influenced the election one way or another. 4 years later, look what a change in tone. Facebook has done a number of things to try to combat misinformation. They've registered more than 4 million voters, but the vast majority of critics say it is not enough. It is too little too late. And the big question is, will these platforms be able to prevent interference, foreign and domestic, in our election over the next It's on itself. It's about what happens after election day. They all have plans in place.
Emily, sorry, got to go. We're right up against the clock. Thank you. Thanks so much to Bloomberg technology anchor Emily Chang, and this is Bloomberg.